Hello. Aha, we're back. Still not advising, but doing presentations. So, where are we? Borrowing. These two, Trevor and Pam, looking to upgrade their current house, ready for retirement. Be left with enough to purchase a buy-to-let property. They currently own their present home, but are seeking a buy-to-let property for 450,000 in the southeast and a deposit of 90,000, which I think is 25%. So very easy. Obviously looking to gear up, I suppose, is the expression. As in, they might be raising some money out of their existing property to buy the second property, not entirely sure. Anyway, those are the sorts of things that can be done. This chappie, he's Mr. High Net Worth. We can lend to him, or there are lenders that could lend to him. He's a bank exec on good money, 200,000 a year. Buying a home valued at 2 million, looking to borrow 1 million. I don't think it's anything particularly difficult. I mean, it would be 5 times his income, which I think is a pretty large income multiple. But in the background, he's got another property that's let out, and eventually, I think his plan is to sell that to repay some of the new loan. So he wants it part interest only and part repayment. And when he sells the other property, he'll pay. That'll be one of his repayment methods. If that makes sense. But really, the point of this presentation is to say that you can stretch your income multiples up. And this example of Zara, she's an estate agent, I believe, and she earns a basic of 20,000, but she gets a bonus of £5,000 a month, which I must say in this market is probably going some. But anyway, a lot of lenders wouldn't consider all that bonus income because bonus isn't always guaranteed. But there are lenders who will consider it, and they will consider it as regular, and they won't just say we'll take half of the 5,000. They'll take the whole lot into account when doing their underwriting or assessing what they'll lend. So that can be done. Obviously, small print. You need to get with a lender who understands the ins and outs and the intricacies of lending, because some lenders you can approach and they just won't play ball. They won't lend you the money that you're looking for. So you need to find a broker who understands what can and can't be done. Something else to think about, for example, Trevor and Pam, the first example, if they were looking to raise money out of their existing property, they could take something called a second charge. So that's really, I suppose, for people that have already got a mortgage. Maybe they've got a redemption penalty for escaping, or for redeeming the mortgage early. So if they wanted to raise some deposit out of their existing property, they could do that with a second charge without having to pay the first charge back straight away. Although 2 years down the line, or when their first mortgage is penalty free, no redemption penalty, they could amalgamate it into one loan, depending how the market is and what interest rates are in the future, which of course we don't know what that'll be. But yeah, it's just second charges are available. I suppose the only other alternative might be to go back to the original lender and say, can you do me further advance? So it's horses for courses. However, sometimes on the second charges, they're slightly more lenient again on the underwriting side, especially when it comes to looking at income. Now, Yeah, what are the warnings with second charges? I mean, I don't like the term last resort lending. It sounds a bit dodgy, to be honest. Um, but I guess it's people that are borrowing more. So there's always the argument that, um, you know, if you're securing more debt against your house, your home is at risk. I mean, that's always been the same as always with mortgage lending. Whereas if you've got unsecured debt, that if you take this example, someone's got 30,000 on credit cards and it's costing them £1,200 a month as a monthly repayment to try and clear that 30,000. Well, if they secure it against the house by way of a mortgage, yes, it brings their mortgage or their debt repayment down by a lot per month. But there is also the alternative that should they really be securing it, should they be maybe coming to an arrangement or, blacklisting themselves? Difficult one to know. I'm just rabbiting on now. Anyway, it's not an easy job being an advisor. They have sales managers, they have the regulators to deal with. But if you're interested in finding out maybe about some more options that could be available to you, leave a message below. If you can find the form in the description, drop us a line and yeah, we'll see if we can help you do something. Thanks for watching.